Hey everyone, happy Friday. So listen, I've got a question for everyone today. Have you ever, ever dealt with someone who just seemed to lie so much that it made your head spin? All right, that's what we're going to talk about today on the Friday Fraudster. Let's go.
Welcome to the Friday Fraudster podcast. Join them as they discuss sad, funny, and sometimes disturbing fraud stories. Be sure to catch past episodes on your favorite podcasting platform or go to www.fridayfraudster.com.
All right, so you all heard the question that I asked earlier. Have you ever dealt with someone who lied so much it made your head spin? Thank you for joining us on episode number 127 of the Friday Fraudster. Now, while I have your attention, I want you to check out episode 51 of Audit Bites, my other podcast, because today the episode title was 5 Things That Will Catapult Your Audit Career. We recorded it live this morning. Got a lot of response. So, if you know anyone who is in their audit career and wants to figure out how to catapult it, send it to them. Have them watch the replay, my friends. So, without further ado, let's bring on our guest for today. There we go. What's happening, guys?
Surprise.
I was worried. I was worried when Christine didn't come up. I was like, what happened to Christine?
I was worried I was going to have feedback again. It's Friday.
Well, all right. So I'm going to ask you all the question that I just asked the audience. Have you ever dealt with somebody who lied so much it just made your head spin?
Do you want me to go first? And this, I hope this sounds okay, but I would honestly sit here and say I don't ever hate people. Like, if you ask me who do you hate, I would sit here and be like, there is 2 people on my list, and I've been on this earth for a pretty long time, and these are people that have lied and have been extremely manipulative and had zero remorse for it. So yeah, which I don't think that's a lot of people. So like I was telling you earlier, Rob, it takes a lot to have me write you off, and these people weren't even really close to me, and it happened when I was quite like a lot younger. So like I'd say more than 15 years ago, 10 years ago.
What about you, Thomas? Have you ever dealt with someone who just lied so much it made your head spin?
I was thinking about that. I can't think of anyone that was that bad. I have tried to teach my kids, if you're always lying, then nobody's ever going to believe you. So I try to, instill that. But no, narcissists, those that won't own up to just honest mistakes that they make, that, those kind of people, yes. But habitual liars, no, I can honestly say I can't think of any that I've really come across that I've had to deal with, thankfully.
Yeah, count your blessings. I've had to deal with a few, but I'm kind of with you, Christine. There's actually no one in this world that I hate. I learned a long time ago to let anger go. When you hold on to it, it has a hold on you, and that person has a hold on you too, if you allow them to control your emotions. But there are some people that I've dealt with that have lied so much that they just made my head spin. And boy, it's painful and it's bothersome. So now listen. So Thomas, you're developing this new software, right? And so you understand what it's like to go through the process of developing software. What's that like?
It's all roses. What are you talking about? It's it can be a challenge. You deal with a lot of different types of people. Not just developing software, but also running your own business. You deal with you interact with a lot of different types of people, so it can be quite a challenge at times.
Yeah, yeah, it can be quite the challenge. And so now you do run your own business and you are developing an audit software. What's that audit software called?
It's called IA Stream, and if
Uh,
people are bored, if they went to iastream.net, they'll be able to find out a little more information about it. But yeah, developing a software specifically for small and mid-sized internal audit shops. I want it usable. I want it very intuitive, where you can create reports out of it. You have dashboards. Basically something that actually help the internal audit world rather than just cost a lot of money and make things cumbersome for you. In a nutshell.
yeah, and so now, so to that extent, you're kind of like the people in Silicon Valley, right?
Ouch.
Except for you don't have investor. Well, I meant it in a good way. I meant it as a compliment. I didn't mean it well. But you keep people in Silicon Valley where you're having to fund the venture and you're having to find the money to actually fund the venture. Now, of course, in your case, you're funding it yourself. So, um, but I mean, you still have your board of directors, i.e., your wife, that you have to consult with.
Oh, very much so. Very much so. Yeah. You still have the board that you have to do. Well, not just my wife, but also my kids too, right? Because every financial decision I make impacts them as well. Whether it's their extracurricular activities, the school that they go to, all of that. So, yeah, I have a lot of built-in internal controls, around, all of those decisions and everything I do, both with IA Stream as well as RVMC. So yeah, it's I teach and preach internal controls and the importance of them, but I also have them in my own business as well. And we talk a lot of times about the importance of just watching your bank accounts, and that's the internal control I have that is active every single day. Is I wake up, do a few things, and then immediately check the bank account to make sure there's no unauthorized activity there. So yeah, every should have some very simple internal controls in place always.
Yeah, so Silicon Valley is a very interesting place, right? Because people develop software and then they raise money, or they raise money and then develop software, or it all happens simultaneously. And oftentimes they have stakeholders before they have stockholders. So they go through several rounds of venture capital funding where they raise money and then eventually they go public. But in the meantime and in between time, they have to report earnings to those investors. And we've seen a lot of tech companies kind of bubble up and then go pop, right? We saw it with Theranos, where we know that her valuation for her organization. And I'm just wondering, like, how must actually lie to some of it?
Robert was cutting out for me. You want to repeat your question, Robert, please?
Oh, darn. If we were to try and get some investors to invest in a dream and you wanted to lie to them, how would you do it?
Okay, so the question is, how would I get investors to invest in IA Stream? And if I had to lie, what would I do to, how would I lie? How would I go about it, right? So that's a good question. I would probably lie about whatever I've created so far, trying to claim that I have more created or a better platform created than is actually in place. I would fabricate either current customers or claim that I have more interest than I actually do in customers. So I would make it look like it's either already successful or it's on the verge of being successful. I just need the money to ramp it up or whatever. So that's probably where I would tackle it first, is claiming I have more customers or more potential, revenue coming in than I actually do.
Oh, now that's good. So now here's a question. And Christine, I'm gonna direct this one towards you. So let's suppose Thomas actually did that and he got a lot of money coming in by lying about how many customers he had. And then he used that money to build the company up. And he built it up. And nothing happened. No investors were harmed or anything like that. But he ended up getting the initial seed money based on a lie. But he actually was able to use that seed money to invest in the company. And he built the company to being a viable entity. So what do you think? Is that unethical? Is that really a lie if nobody was harmed?
It's 100% unethical. Your question is making me now sit here and think, how many original startup companies are out there that are successful now? Financial statements are all good now because they've got that money. They don't have to lie anymore, and nobody knew about it. Fake it till you make it.
Ooh, absolutely. So now Cynthia Ralph is here and she says, will you be discussing an example of a fraud that occurred? Cynthia, we absolutely will. This is all a part of it. So I don't know if you've ever attended the show before, Cynthia, but what we do is we have casual conversations that lead directly into whatever the fraud is. So everything is related, and we like to discuss fraud in a very interesting and casual and conversational way. So what you'll find is the things that we're talking about right now, they are directly related to the story as it unfolds. So it's almost like a Sherlock Holmes kind of detective-like podcast. And I agree with Galena. She says it's not difficult to deceive investors, in her humble opinion.
Well, because here's the thing. Let's say you're a startup company, right? Good question for Thomas. When are you going to get audited financial statements?
Ooh.
Do you know what like? Is that the normal for startup companies?
Yeah, I mean, for one thing, there's nothing to audit, right? But as an investor, the first thing I would do is if you say I have these customers either already paying and I just need seed money to build something more, or if I say this interest whatever, I would say, okay, show me the bank account. Show me some evidence that you're actually having this revenue come in if you claim you have these customers. Get it straight from the bank. Don't have them send you the bank statement. Have them send the statement straight from the bank to the investor. But yeah, it's asking for I've ran RVMC for 6 years now. Now I don't have investors, but I also don't have audited financials because I have nobody that would require them or would need them. And even if I had someone that required them, that's a lot of money and extra work to do. So I would really be fighting it, to be honest, and not because I have something to hide. It's just that's a lot of additional work and a lot of additional overhead to try to cover.
Yep.
I want to play devil's advocate as well. Sorry, Robert. Let me know if I'm stepping over the line.
Oh, no.
How many investors? Okay, so we're talking about investment. We're talking about startup companies, right? You want to be that first investor. If this is going to be the new Facebook, if this is going to be the new Twitter, if this is going to be the new AI company that's bringing out a software, you want to be one of those first investors because your $500,000, come on, these people have money. Not saying that this is right. I'm not saying it at all. But you want to make that $500,000, $2.5, $3.5, $4 billion. And the faster you get in the door, you're sitting here thinking the faster I can get paid out. That's my opinion. So I also think there's not a lot of due diligence on these investors because they want to get in the door fast.
Well, I think
That
that's
was
what
it.
the
That's
main
a good
problem
point.
is, right? I mean, they want to jump into it as fast as they can. I mean, we've seen the same thing with the PPP loans and some of that. It's just
Mhm.
get it done, just get it done. And we've seen the fraud that takes place. So, as investors, they're it's always a calculated risk, but they're increasing that risk, acceptance by just jumping in, trying to be the first like that.
And so when you look at both sides of this, you have the person who started the company, who founded the company, who's looking for seed money, and that there's a potential to maybe be dishonest there. And then there are investors who want to be first because they know that they can cash out. So now let's talk about today's story, because the first question I asked was, have you ever dealt with someone who lied so much that it made your head spin? Then I asked Thomas about his new venture, because it is a software as a service organization. Today we're talking about Headspin. Headspin is a SaaS-based company that provided software as a service to organizations in order to test mobile applications. And what the CEO and founder of Headspin did was, now today we're just diving right in, you guys, right after the conversation. Sometimes we have little details that we sprinkle out throughout, but this one is just kind of cut and dry. He's actually admitted to doing it. But what he did was he lied to investors about how profitable the company was. And what he did was he used accounts receivable to commit his fraud. So, in other words, he said that some contracts that were annual contracts based on subscriptions were greater than what they actually were, and then some customers didn't exist at all. And so he overinflated the ARR, which is the annual recurring revenue. And what that is that's a non-GAAP metric that refers to the revenue a company expects to receive from existing customers on a recurring basis, usually on a subscription basis, over the next 12 months. So the figures that he reported did not exist at all. The customers, in many cases, did not exist. Then he also created fake invoices in some instances, and he also lied to the was it the chief accounting officer or the controller, the person responsible for the books. He lied to that person about the revenue as well. So
Mhm.
what do you all think?
Lack of internal controls. If you've got a controller, you have an accounting person, if you've got contracts, why is the CEO having anything to do with those contracts? At this point, with the amount of money, do you not have some sort of a contract department or vendor department that would deal with those? I mean, he did a lot in a short amount of time.
Well, if I remember the detail right, he claimed to have about 20,000 customers, and he only had about 2,000.
Right.
Yep.
It, now, not just my company, but other companies I know, when you have, especially when you have a solo founder of the company, they really want to, they have a hard time letting go of
Mhm.
the responsibilities, right? Hiring someone to run your accounting group or your contracts group. Like, I've negotiated all of my contracts. Why do I want to hand that off to somebody else? I'm the one that's been doing it. I know it, name the excuse, right? So I can see those kinds of like legitimate arguments of, well, why didn't he hire someone to handle that? Well, because he's always done it. And if it's an annual type subscription, you do negotiation one time, and then you almost don't have to touch it. It's just automatically renews. If you're a typical company right now, you're trying to increase that annual fee at some point. But so that doesn't surprise me much. But I am surprised that nobody looked into not the invoice side, but again, on more on the bank statement side. Okay, great, he has fake invoices, but 18,000 more, lying about 18,000 of these customers, that's a lot to cover up.
Yeah.
Especially if you have a sales department. I mean, between all your salespeople that are handling those real contracts, wouldn't they all sit here and go, we don't have that many? And that's if they had one. That's speculation.
Yeah.
But if he was able to modify everything, your income would be what he wanted it to be.
So here's the deal. Between April of 2017 and April of 2020, they raised more than $100 million from multiple investors and had a valuation in the market of 1.1 billion with a B dollars. So what he did was in 2018, in connection with one of the fundraising rounds, he sent a slide deck to investors that stated that their annual recurring revenue was more than $33 million. Now, he knew it was far less than that. Then, in another round in 2019, he provided investors with information overstating the revenue, saying that it was $54 million, when in fact it was probably about a quarter of that. And he also altered documentation that he sent to KPMG as the external auditing firm. So he did have an external audit firm look at the financial statements, and he sent them false information as well. So the investors took his lead off of a PowerPoint slide deck early on.
Well, and how many of those Series C investors were already Series B investors or knew of Series B investors, and they're like, oh, you have to get in on this if you see their financial statements.
There you go. And that goes back to the point that you were making earlier. How many of them were opportunists and saw a good quote unquote opportunity, even though it wasn't, which leads you to not do adequate due diligence. Now, again, I'm not shaming the victims here, but speaking of shaming the victims, now he has pleaded guilty to quite a few things, and his lawyer has come out and said that they don't agree with the government's calculation as far as the amount of damages because, and here's the reason why, because even though he lied, no investors were actually harmed. So in other words, no investors actually lost any money in his fraud scheme.
Do you know why they didn't lose any money?
Why didn't they lose any money?
Because when they got the financial statements audited, the board of directors back in March of 2020, they kicked the CEO out, they kept the company, and Headspin paid back all that money to the investors that lost anything. And that is the only reason why the SEC did not fine Headspin, the actual company, rather than the CEO. So of course they didn't lose anything because they got paid back by the company.
Yep.
I still think he should pay the money back. Somebody lost.
Well, not only that, but okay, Robert, I want you to invest $1 million in the IA stream, and in 5 years, I'm just going to give you that $1 million back. How's that deal sound to you? Right?
Right.
It's like, these investors, okay, yeah, they got the money back that they invested, but they didn't make any money like they planned on, and they could have very easily just put it in a bank account and drawn interest off of it and made something. So I mean, they are still at a loss even if they got their initial investment back. So yeah, they're still there's still losses there. It's just not possible to calculate them.
Mm-hmm. And would they have done something different considering this all happened before COVID? So COVID hit and they had that opportunity before all of this blew up.
Well, there's more though. So get this. His lawyer was saying that even though his main investors knew that the financials were not accurate, according to his lawyer, they chose to invest anyway because of the $1.1 billion valuation. So his lawyer is saying that the main investors knew that the financials were not accurate. Then they also said that his main investors pushed him to get a CFO and that he just simply brushed them off. And see, that's where I was a little confused, because as I was reading, they kept saying he even lied to the accounting person. So I was like, okay, was that the CFO or chief accounting officer? Well, apparently there was no CFO, which is one of our red flags, right? He's the CEO and the CFO and the founder of the organization. But yeah, so the investors pushed or kept pushing him to get a CFO, and initially he did not. And obviously they got one after the investors pushed him out. So this is a lot of stuff to unravel. His lawyer is saying, let's go back to the beginning. His lawyer is saying, first, nobody was harmed. Now we know that they were necessarily not harmed because they got the money back. But secondly, they were saying that the investors actually knew that the financial statements were false. So let me just get this straight. We know that the founder and CEO of an organization is lying to us, and we're still going to invest in this organization and think that he or she is going to do honest things with the money.
There's proof that you falsified the financial statements. Where is the proof that your investors knew you were lying about it?
There you go.
Please show us.
Well, and there's lying when it comes to, oh yeah, we have 20,000 customers, and you're like, well, you really have 18,000. You
Yeah.
know, you know, and there's, you know, oh, we have 20,000 and you have 2,000 customers. You know, there's a big difference there. So they might be thinking, oh, you're lying, kind of like someone might inflate their resume a little bit or embellish a little bit on a resume. Not, we're going to make up, you know, 98% of our customers here. There's a big difference there. So the lawyer might be technically accurate there, but it's not he's not materially accurate, to put it in audit terms.
Now somebody is asking, this is probably Stephanie, I think, collusion.
Yeah,
You know,
Stephanie.
Here's my thought. It's very much so possible, because in the end, it looks like he is the only person that is taking the fall. So it is possible that there was some collusion and he's taking up for everyone else, because in the end, let's see. He pleaded guilty to 3 counts of fraud in April. He's set to be sentenced next month with a maximum penalty of 20 years in prison for each count, and he is currently out on bond. So now we have to believe that he had so much control over everything that he fooled his accountant. He also fooled KPMG, and he also fooled a bunch of investors. I kind of wondered about collusion, because that just sounds like a lot of really smart people to be fooled by this one guy.
And I was wondering that too, because I found the DOJ released information, and it looked like he was initially charged with 11 counts of wire, 4 securities fraud, 1 money laundering, and they pleaded down to 2 wire fraud and 1 securities fraud. That's a big drop in charges. So I guess, was there somebody else, and there's going to be more coming out, because he's out on bond. And I couldn't find where they were supposed to sentence him. I thought in September of this year, but I couldn't find anything on that.
Yeah, it got pushed back to next month, to January of next year.
Now, Christine, have you seen any references to KPMG? Because I didn't see any myself, and I know Rob, has mentioned that. Did you see it anywhere other than wherever Rob saw it?
No, I have not. But it's making me wonder if the reason why is maybe KPMG is like, we are bowing out because we don't want any relation that to this gentleman that we relied on documents that he provided for us. But even at that point, I mean, as an audit firm, I mean, do they do testing of contracts? Would you sit there and go, all right, we're going to take a sample of 100 of your customers or 150 of your customers and see if they're real?
Oh, you know what? And actually, let me make a small correction. KPMG came in to do the recast of the financial statements.
Okay.
And that is in the affidavit.
Okay.
Okay.
Yeah, someone mentioned collusion. You're saying that it could be, especially how they pled down. I don't know. I wouldn't necessarily say collusion. I would say that there were employees that obviously knew something was going on, and actually, I think one of them, there was a conversation that was caught on Slack of, asking, hey, do we really have 20,000, customers? And they said, hey, go talk to that guy. So it seems, I wouldn't necessarily say collusion, but it was more of everybody kind of knew he was fudging things and just didn't say anything. But I think they were more like underlings, like employees, not necessarily someone that was higher up that was colluding with him. It's kind of what it seems to me.
Yeah, and it could be that he had so much control over the processes because there was no CFO. Sounds like there was like an accountant, quote unquote, that was doing the books, more like a bookkeeper possibly, and he was giving them fake invoices. So he did enough to prepare fake invoices. So he understood that there was some sort of checks and balances, but without a CFO, and who knows what the sales force actually looks like. It may be that there was no collusion and that he did it all on his own. Now, I think this might be Stephanie saying, sounds like he's the fall guy. I bet he's out in 5 years or makes a deal to turn in others.
Oh, yeah. Because did he actually take any of the money for himself?
That's what I couldn't find. I don't think so. And I think that's why his lawyer is saying, no one was actually harmed in this, because I can't see where he took any money and lived like a lavish lifestyle. His lawyer actually said that he only paid himself, I think it was $250,000 or $225, something like that, throughout. Yeah, he took a salary of no more than $250,000 during his time at Headspin. He lives in a normal house in the Bay Area with his wife of 20 years and his daughter.
So it's a pride thing. It's all down to pride. He was able to say he's $1 billion. He has a $1 billion software business, is what he wants to say. So,
well, and I'll take it another step. I think it was, to your point, a pride thing, but also really wanting to try to make the company work. Now, I'm not saying that he's a good guy and he's like noble and falling on a sword because of that, but I'm just, the underlying was, I really want to make this company work. I just got to fudge this a little bit and then I'll make it back. I'll put it back. You know how sometimes people say, I'll put it back. I only took $10, but I'll put it back in the register before we close it at the end of the day. Wink, wink.
But if I remember right, one of the articles, someone did a calculation and they said he didn't have to do all of this, the fudging of the numbers and making up customers and invoices. It was still a very successful company. It just wasn't at the level of what you hear about in Silicon Valley. And so he was fudging them to make it there. And yes, I completely agree with that statement. Willful blindness is still a crime. 100% agree with that statement.
Yeah.
He was wanting to make it big fast. And I think there's a lot of companies out there in, like what we used to say in the credit union industry when we used to do examining was, if you're going to grow, you need to grow slow.
Yeah.
Like just simply adding assets onto your balance sheet or merging and everything else is not going to solve your problems.
Yeah. Scaling is difficult and it does take a lot of money to actually scale. And to your point, if you start slow, then it's probably better for everyone all around. But look, let's go back to these investors now, though, because it sounds like from everything that I read that they were astute enough to recognize that there was a problem with the fact that it wasn't a CFO. So what I'm also wondering, though, is why didn't they actually push for audited statements sooner. Because Galena said earlier, she said, unless you're preparing for an IPO, statements won't be audited externally. And most times that is very much so the case. But as an investor, you can request it. It is an additional expense, to Thomas's point.
Yeah.
But with a company running extremely lean, like most SaaS companies are in the beginning, it's not that much of an expense. You could get an external audit for, anywhere from $25,000 to $125,000. Now, I know that's a huge range, but for a company that's a multi-million-dollar company with slim operations on the administrative and accounting side, it's not going to cost you that much when you're talking millions being invested. And now we're talking about maybe 100 or so thousand for that audit. It's still worth it.
Mm-hmm.
It's still worth it. And also, I've said on LinkedIn so many times that we need to stop worshiping at the altar of the big four. And this is an example here that just because, an investor says, hey, let's have some audited financials, that doesn't mean you have to go to the big four and spend way, way too much money to get them audited. You can have a smaller or mid-sized company. I don't know, so this is not a sales pitch, but you can have an actual CPA firm come in and do the audit for much cheaper than the big four. So then you have something to be able to show and say, yes, these are accurate and legitimate financials.
Yeah. Well, and here's the thing. I believe, and me and a few other people, and I know, Thomas, you believe this too. Boutique is going to be the way of the future. Smaller boutique firms. Most of them have a lot of industry experience and can come in and spot things right away. And here's the big thing. Now, again, I'm not going to sell anything either, but most of my practice as a trainer is geared towards the soft skills. You can recognize certain things just by doing critical thinking. If I'm an investor and we've asked you to bring in a CFO and you've pushed it off, but yet the money is there because you could have hired a fractional CFO. To me, that's a red flag. Now, when I ask you about your accounting team and I notice you have maybe a staff accountant and not even a controller, that's another red flag. He also lied and said that companies like, I want to say Amazon and Microsoft were customers when they weren't. There were some big names that he lied about being customers and they really weren't. Things like that are kind of easy to prove too, because if you're telling me you have this huge company as a customer, I might want to see the contract if I'm investing millions in it, and all I need is a piece of paper with a signature on it. But there's certain things that are red flags that, let's just face it, a lot of experienced people who aren't necessarily at some of the big firms, who may used to work for some of the big firms, can actually spot, because there's not that red tape. There's not that person with 1 to 3 years of experience sitting there on your engagement. There's someone with years of experience, because experience will help you go beyond the numbers.
Yep.
Yeah, I'm reading it. It didn't have formal accounting controls, policies, procedures, or your full-time finance professional, such as your CFO. He was the final decision maker regarding when, how, and whether the company would record a sales and revenue, which was kept on an Excel spreadsheet.
Yep.
And then he would instruct employee 1 to book and record revenue. He discouraged and restricted employee 1 from seeking documents or information or would provide incomplete stuff. And I think it was finally that employee spoke up to someone at the board, and that's when they requested that firm to come in and audit them.
Yeah, I do remember reading that there was one employee who kept asking him for information and he kept denying that information.
Yeah.
So that right there is the big red flag, right? Him kind of instructing, hey, we have this sale, go ahead and book this revenue. Again, from a business owner standpoint, I can see the dynamic there a little bit. But the moment that the accountant starts asking questions, hey, can I see this contract? Hey, can I see it? And he says no, that's the red flag that something is going on. I've got a client that I actually do outsourced, accounting work for, and they go over the top providing me with information and documents to show there is nothing that is questionable going on. They want to make sure it's very clear that everything is being reported exactly how it's supposed to be. So this is the opposite of that, right? There, anytime a question was coming up, he was, brushing them off, or not doing the CFO, or not providing the documents. Now, that right there are so many red flags there that that I'm glad that somebody spoke up at some point.
And he was altering real invoices. Were you just saying that, Thomas? I'm sorry.
No, I didn't say that part, but you're right. Yeah, altering stuff.
And it's the simplest alteration. He had one customer that they billed $81,600, which they paid, and they received it. You know what he did? He put a 3 in front of the 8, and that's what they booked it for.
Yep.
And so there was no reconciliation of the bank statement to the revenue.
I'm guessing it was that employee one, but they were probably doing as much as what they could with the documents that he was giving. Because every single time he had one of these large invoices, it looks like he was pushing it to employee one. So there must have been somebody that was there in the accounting department that was just like, okay, I'll book it. You tell me what to do.
Well, and the thing is, what do you do if you're that employee? Because you don't understand, everything that's happening. You just get bits and pieces of it, and your boss, who you feel like you should be able to trust, is telling you what to do, and so you're just doing it.
Well, think of us as auditors, right? When we sit there and we have a red flag, right? We don't raise that red flag until we're like, okay, we're pretty certain, or we feel comfortable enough to bring it to senior management that we're putting it on their plate and they have to go ahead and have that. We've got training, we've got experience in that. We're exposed to that all the time of, oh my gosh, something's wrong. Hold on, see what's there, look at it, and then don't be jumping to conclusions. You don't see that all the time. If you're working in an accounting department for a company, let's say 20 years, you might run into little bits and pieces there, not that often. This is a whole new ball game where you're sitting here and thinking, am I overreacting? Is what he giving me really? I mean, this is the CEO. Like, who do I talk to about this? I don't think there's a whole lot of training in that. And your company, pretty sure they don't probably teach you ethics class every year, or a conduct, a corporate conduct policy that they train them on every year. So that's got to be hard. Like, they probably don't have a whistleblower line.
Well, so the one thing that Robert hasn't brought up yet is, we keep focusing on there's no CFO. There's also no head of human resources either. So yeah, there's no way they had any of those policies, a hotline, anything, because they had no department to even, say they needed one. So yeah, you basically have to go to the CEO, founder, owner of the company, or you shut up and do your job, or you quit.
Mm-hmm.
Yeah, it really seems like what they had the options there.
Well, and the other thing too, with them being at the stage that they were in, the person who founded had no options even outside of the company. So if they were a publicly listed company, they could have filed a whistleblower complaint and actually collected some money on that. I was reading that in the first half of this year, we had the most amount of money shelled out to whistleblowers in the last several years. So, but this wasn't a publicly traded company yet, so you didn't even have that option available to you. So,
just want to put it out there because I know we've been bringing up Headspin's name a lot. They do have a new CEO. They do have a new chief technology officer, an operations officer, chief revenue officer. They've been putting in, or the SEC said that they've put in controls. It was part of them stepping forward and the board doing the investigation. So I do want to make sure, I don't want to be like throwing this company under the bus. They've fixed the wrong that their creator and old CEO did based on the information that we've seen.
Which goes back to the confusing part, right? Because it was a profitable company. It's my understanding that its products and services are actually really good.
Mm-hmm.
Now, from what we can see, he didn't take this money and live a lavish lifestyle either. So what really happened? And I guess we can only speculate. He wanted to scale and scale up very, very fast.
I think it comes down to, I think of it as gambling. Essentially, what this guy did is he gambled with other people's money by lying to them.
For sure.
He thought, I know what I'm doing. I know what these people need. I can make them a lot of money, but we kind of got to put the work in first. He took a gamble because, we look at SVB failure, Silicon Valley Bank. That happened in what, 2023? That right there should just tell you how many startup companies don't make it.
Yep.
SVB's
right,
failures different. They just didn't have a diversified portfolio, but that right there should sit there and say, we had all these startup companies. We didn't do well on our asset liability management, and they ran on their deposits because they were broke. So,
yep.
So two things real quick. 70% of new businesses fail between years 2 and years 5. So yeah, a very, very large percentage. It seems like we all missed a very important detail from 2019. In 2019, according to one of the articles, says he cashed out $2.5 million to an investor. So he did.
I forgot about that.
Okay.
Yep.
There it is.
There it is. That's where. But so yeah, he cashed it out. He had 2.5 million in the bank, and then he kept trying to inflate it so that way he could sell more later on. So yeah, it's just one of those that he didn't take the opportunity to sell yet. He got caught before he was able to do it. It seems like.
Okay.
Yeah, 2.5 is not a lot,
Mm-mm.
Yep, especially at $1.1 billion valuation. Of course, that was the next year, but yeah. So the valuation was probably getting close to $1 billion by that point. He cashes out $2.5 million, and then yeah, he's probably holding on to quite a bit of money, just waiting to cash out, and then he gets caught.
Yeah, quite interesting. All right, so I'm gonna thank everyone for joining us today. And then Clarence is doing it already. I'm not doing a giveaway today, but Clarence, I owe you anyway. I don't know. For some reason, Clarence's coupon code wouldn't work in my store. A lot of people have cashed in their free mugs today or this week, but I gotta fix Clarence's coupon code for some reason. Oh, by the way, Clarence, try all lowercase. I think it's all lowercase, but I'm not doing a giveaway today, Clarence. I know you're probably surprised by that, but today I've actually done 2 shows today, 2 podcast episodes today. So this is the second one, and I gave away stuff this morning, and I'm just tired.
Well, then can I do a plug quick?
Yeah.
And you guys will both be shocked on this. I finished reading your book.
Oh boy. Okay.
I finished it in less than a day. I read kind of fast, but you can see I've got tabs in there. And I did give you a review. If anybody wants to go to Amazon and look up your book, I gave a review. I want to let you guys know, if you have not gotten this book, this is more, Robert, I think you short sell your book. This is more than just how to ask better questions. This will give you a little, and it's good. Robert's got some great stories. It gives you insight on the type of auditor that you are at times, because I think we can kind of go back and forth, and how to understand who you're communicating with. So yeah, Robert, I think it's a little bit more than just, asking better questions. This gives a lot of personality insight in a really good, short, decent read. So you guys will really like this. I got a couple pages tabbed that I have to highlight some information out of.
Oh, I really appreciate that. And it is more than just asking questions. It dives a lot into psychology and sociology, because in order to get good answers from people, you have to be able to relate to them, which is why the actual all day, 1 day and 2 day program is really good because we dive deep into all of that stuff. You can have that's okay. This is why I don't like checklist auditors, those who just come around with their checklist and say check, because that never works. You have to really understand how people think. You know what? Since we're here, let me just tell a story. So when I was the chief auditor at the University of North Florida, we had these external auditors that would come in for one of our foundations. They would come in every year and they wanted to talk to me, which made sense, right? You want to talk to the chief auditor to try and figure out what the control environment is like. And one year they sent in this young kid, and I don't mean to sound disparaging when I say that. They just sent in this young kid and he sat down in front of me and he said, "Mr. Berry, I just want to ask you a few questions." It's like, "Sure, man, whatever you need." He said, "Do you think that there is fraud occurring at this organization?" And so I look at him and I say, "Yes." And so that wasn't the answer that he was expecting, and it didn't fit his checklist. So you could see him fumble with his clipboard. And so he said, "Okay, wait. So let me just ask this question again. And let me ask another question." And I was like, "Sure." He said, "Do you think that there's someone stealing right now at this organization?" And so I look at him square in the eyes and I say, "Yes." And so he fumbles his clipboard and he actually says, "Excuse me for one moment. I saw this young man get on his cell phone and walk outside, and he called somebody up." So he came back in and he sits down and he looks at me again and he says, "So, Mr. Berry, you mean to tell me that you think that there's some people in this organization who are probably trying to steal from you all right now at this very moment?" And I said, "Yes." And he said, "Well, do you know who they are?" And I said, "No." And he said, "Well, what makes you think that somebody is stealing from you?" I said, "This is a $1 billion business. You can best believe that at any given point in time, there's somebody somewhere trying to steal something from us." And so he sat there and he was trying to figure out what to check on his clipboard, like, because I'm sure his questions only had yes, no. And so I'm sitting here and I'm thinking, "Oh God, I should stop playing with this kid and just, you know."
Giving him anxiety.
Yeah. So I said to him, I said, "Listen, no matter what business you're in, somebody is trying to steal from you at any given point in time. The question you want to ask me is that, as the audit director, do I believe that there are controls in place that will either prevent and or detect anything like that in a timely manner?" And he said, "Oh, well, yeah. Do you think that that you all would either catch it before it happened or shortly after?" And I said, "Yes." And so, I'm not sure if I told that story in the book. I can't remember,
You
but
did, because when I was reading it, because I used to have to answer those questions too, and instead of saying yes or no, I would simply, because we would say it to our examiners, I would sit there and go, "Not that I'm aware of." Like, I'm not aware of anything. And then when you said no, like, I was waiting for the next line to be something like stupid, because you talked about materiality, and I wanted to be like, you were going to sit here and be like, "I'm pretty sure Susan's stealing pens out of the supply closet," or something so stupid.
but I think for us as auditors, there's a way that we can ask questions that gets us better information. Because, like, for example, in the book, I say another example where, we oftentimes ask people, "Do you believe that there's fraud?" Kind of like that young man did, and the answer is going to be yes or no. Whereas you could easily say to someone, "Tell me about the last fraud that occurred." And what's gonna happen is, especially if there are two people in the room, they're gonna look at one another and somebody's gonna be like, "Well, there was that time that Janet stole," and then they're gonna be like, "No, that wasn't the last one. The last one was Steve." And so now they're having a conversation trying to remember the last fraud that actually occurred.
Yeah. No, it was a really good book. Like I said, I read it really fast.
It's a quick read. It's only 130 pages or something like that.
It's 156, 160, but 160, 170.
Yeah, I don't want to waste anyone's time. Here's what you need to know. Here's why you need to know it. Here's how you can actually apply it to your job to make your job easier for you.
Well, you did a great job. No different than I said with Kelly. I love your stories. My next one I'm going to go on to is Amanda Joe's book. But yeah, no, the stories that you told in there. I mean, the whole Starbucks one just really blew my mind. So you have to tell me that one's true.
Wait a minute. You know, I wrote this book 3 years ago. What was this? Oh, no, that's okay. So
Did
that
you
actually
make that
is true.
up?
Okay, no. Every part of that one is true except for the actual real marriage. Like he was actually joking when he proposed.
Okay, maybe I didn't get that because I was reading too fast.
Yeah, no. Well, it doesn't come across like that because that was too much to try and explain. But the story actually did happen to a coworker, and you guys will just have to read it to figure out what she's talking about.
Oh man.
But he was actually joking about the proposal, but he was serious about trying to move the relationship forward.
Okay.
Yeah.
Wow. So I got one of my 2024 New Year's resolutions done. Got your book done before 2024.
Now I actually want to read it. I like books that actually have stories and stuff. I was just gonna keep telling other people to read it.
It just gives really good context. I like examples too. I learn from examples. Learning styles is in there too, people.
Yeah. Well, but you do know why learning styles is in there though, right?
Because that's how you're communicating to your audience to get them to understand, because you're teaching them through the whole process. And
yeah, well, and see, I didn't say this in the book. I say this in a lot of the training courses, but auditors are actually teachers.
Mm-hmm.
So when you think about what we do, we go out, we assess areas. And oftentimes what executive management thinks is happening is not really what's happening. And so when we do an assessment, there's always a disconnect between what the executive thinks is happening for the process and what's really happening. So we have to first learn. So we're gathering a lot of information. After we gather that information, we're turning around and we're teaching people what we learned about their processes, especially when you have a process that spans multiple departments. One department doesn't even know what the other one is doing. And so in order for us to be the most effective, we should use teaching techniques to convey a message, which is why I use teaching techniques in the book, and which is why I've always used teaching techniques in dealing with clients. There really is a science behind it.
Mm-hmm. I mean, you mentioned other books in there that I'm gonna have to look up too.
One of them is actually not in print. You'll be able to get a used copy on Amazon. The one from the lady, what's her name? Mary Jo. I forgot her name now.
I'll look through.
But yeah, anyway, I think we've rambled on long enough. And you know what? It's funny. A lot of people have still hung on. So maybe they've been interested in this conversation. Because Galena says, Happy New Year, which lets me know she's about to go. She's like, okay, look, y'all, I've had enough. I'm about to go. All right. Well, thank you all for joining us on episode number 127 of the Friday Fraudster. And we're not skipping a beat. We will be back next Friday. So
Happy New Year, everybody.